every company has competitive weaknesses. And if you can exploit those weaknesses and you can live to fight another day, you can end up on top in a similar business to what other people are doing. It's all about understanding the product, therefore understanding your customer. And once you understand the customer, create opportunities where you're in a position to ask them to buy so that they can solve a problem or take advantage of an opportunity. And, goals is another thing about me. I'm a big goal guy across the board. I talk to my kids. I have little goals, I have medium goals, I have big goals, I have long goals. And I think looking at the world in that way and trying to understand what the goals are of the private equity firms and of the strategic potential buyers is an extremely important thing to do when you're out there pitching them on buying the company.
Welcome everyone to another episode of the Tech Leaders Playbook. Today we have a very special guest, Russ Hawkins, a 3-time CEO known for transforming struggling startups into thriving, exit-ready companies. He and I met weeks ago. We had a great conversation about this. This guy, from engineering pivotal market shifts, scaling headcount and revenue, Russ brings decades of hands-on leadership that will resonate with any tech founder navigating uncertainty, especially these days with all this AI and constant pivots needed because of what's going on. Thank you so much for being here, Russ.
Well, thanks, Avetis. Thanks so much for having me. I'm looking forward to a great discussion.
Absolutely. You and I spoke, and it was a very interesting story that all the companies that you've rebuilt and scaled, none of them you found, right? So you were an actual professional CEO, came in to fix businesses, which is really funny because the podcast before you, which was, I think I did it last week, he actually talked to accidental CEOs, founders. His whole business was, accidental CEOs. These are technical people or product people who founded companies but aren't real CEOs, right? So trying to help them become that and all that. What a funny.
Well, all three of the companies that I've been involved with had I guess, accidental CEOs.
It's very common. It's very common.
Yeah, I think it is. I think the technical people, the people that coders and market analysts, they figure out a product that has a demand, which is, I think, a step, very important first step in anything. And then suddenly they, raise some money or whatever it might be and find themselves having to do everything. And they're really not, generally speaking, they often do not want to do that, and often they're not very good at it. And so,
absolutely. We talked about some of these CEOs have 30 years, 40 years of experience as professional CEOs. They might have MBAs, and they've worked their way up from director to VP to this and that, and all of a sudden there's a 27-year-old brilliant technologist who now has to be a CEO and handle operations and HR and stuff that they just don't know how to do, they don't always enjoy it, and they're not good at it and don't want to be good at it sometimes. So that's why guys like you come in typically later in the game. So let's talk about that, Russ. How did you become this turnaround CEO? Like, take us through your journey a little bit.
Sure. Well, first of all, I didn't have much money growing up. I come from a long line of firemen. My father, grandfather, great-grandfather, all firemen. In the Boston area. My father had way too many kids, 7. And so we didn't have a lot of extra cash when I was growing up. So what I learned early on, I learned to be a little bit of an entrepreneur. I started early working. I had a couple of small little businesses of my own. But the reason that in terms of real business, I got into sales really originally because it was the easiest way to become, to run your own business without having to put up capital is really what it came down to. Is you could exist only as a result of your own capabilities and your hard work. And so my early career was sales, and I did very well at it. And I did well at it by listening and by trying to understand what the problems were that the customer had, and trying to figure out how my product could help them solve those problems or take advantage of opportunities. And the result was I did very well. I made a lot of money on commission, and I worked my way up into sales management role, and then I was tapped to do some interesting project work. So this is back in the early days when I worked at AT&T, and I had a great experience and really exquisite timing because this is back when they broke up the business. So I'm showing my age a little bit here, but that company, talk about people who weren't ready to be CEOs. These people weren't ready to run a real business. Everybody that worked there, including all the managers, had grown up in a monopoly environment. And so when they broke the system up, they put all these guys that were from a monopoly in charge of this new, completely deregulated, competitive business. And they failed miserably at it. And I thrived. I was able to really thrive in that situation. I got an opportunity to work on a couple of task force. I think we spoke a little bit about it before. For about a year, I worked elbow to elbow with McKinsey. And I kind of feel like I got my practical MBA, or my in practice, as they say in the nursing business, practicums, yes. Right? So, and what I really became aware of the fact that a lot of people don't know what they're doing, and that you really need to think carefully about what your business is all about and how you're going to go about it. And I like to think of myself, I started to think of myself as an intrapreneur, somebody that had entrepreneurial bent and entrepreneurial skills, but operated inside a larger organization.
Yes.
And in this tumultuous situation that we had at AT&T at the time, that turned out to be really great skills, because we were reinventing the world as we went along. And I went through a series of assignments that had tested those kinds of skills and that kind of perspective. And I did very well at a lot of them, including at least one when, we bought NCR at one point, and we tried to become a data company. And I was put in charge of the first branch that was going to sell software, and failed miserably. Now, I didn't fail miserably, because I went in there and I basically learned that we knew nothing about this, and that the whole premise of the business model that they put together really wasn't going to work in the real world, because software is not like a product. You don't plug it in and have it work. You have to support it. You have to be able to apply software to the problems. You have to be able to manipulate it. At any rate, it was great training for many years doing that at AT&T, and then in the mid 90s, in the run up to Y2K, everybody that I saw, all these people, many of whom I knew I could, manage and sell circles around, were going out and working in some of these tech startups and making $1 million. And I said, hey, I want to make $1 million. Who doesn't want to make $1 million? I want to do that too. And so that's how I got into the first job. The first job was a data communications equipment company. It was a spin out of General Datacom. The guy was the head engineer there that left and started his own company. And I came in as a sales and marketing VP. And within a year, I basically came up with a proposal to completely pivot the business, to go in a completely different direction in terms of the customer set that we were going after. Presented that eventually to the board. And before long, I was made the COO, and then very shortly after that, I was made the CEO. And the company at the time went from being about $1 million in sales over a period of a few years. We got up to about 24 million, wow. and then sold it. And I started to develop a little bit of a playbook for how to analyze these situations. Certainly had a lot of experience in that. And then now having the title of CEO, and we sold the company, I made my $1 million, and then I got recruited to another startup company, another similarly challenged startup company in the high performance computing area. This was a technology called InfiniBand that was trying to displace Ethernet, which of course there's been many fools over the years that have tried to displace Ethernet. The technology road is littered with the bodies of those kinds of companies.
I bet.
But I found a way to move forward. This was actually the worst company. There were 14 companies funded in the tech universe. This was arguably the worst of the 14, which actually is an appealing thing to me. Some people might not be have appealed to by that, but for me, it was an appealing situation because I couldn't get any worse. I was already at the bottom of the barrel, and I was able to refocus that company and find a couple of niches, use cases that really was able to leverage the technology and grew the business very, very rapidly. And within 2 years, in that case, we had grown the company by a 20x factor, and had some attention from some other larger connectivity companies in the networking business. And they acquired us and
Wow.
made a little bit more money and got a better burnishing of my reputation. And then I wanted to get on the pure software side because I believe, I think it was Mark Andreessen that says software eats the world. And I believe that. And so both of the prior companies had more kind of hardware chops. And I wanted to prove that I had some software chops. And so that's how I ended up here at Agilence.
Yeah.
And in this case, it's taken a little bit longer. And we had to do a major pivot, or not, we didn't have to do it, but I forced the company to take a major pivot to become a data analytics company rather than prior to that, we were kind of a specialized video company. And so by this time now, after 3 of these companies, I've kind of built a playbook of how to come in and analyze the business and figure out what to do. So I feel like I'm talking a lot here. So
Oh, that's okay.
stop.
That's okay.
Let me
So
stop.
let's talk about Agilence, right? So you
Yeah.
led that major pivot into 2013. So it has been a while. What
Has
was
been,
what was the company doing? I mean, you told us what it was doing, but what was it doing then that you realized, no, we need to pivot? Tell us like how, and beyond the story, how do you determine a company needs to pivot or they're going to die?
Well, in this case, the handwriting was on the wall to me. I mean, from what I could see. So the company had been a very specialized video player. We had even though the value of our product was in the software, we delivered it in a hardware wrapper. We used commercial off the shelf servers, and that's the way we sold and delivered it. So it had a very, very high hardware percentage. The technology itself had been patented, and one of the major signals for me was that the prior ownership, the prior leader, the CEO of the company, had failed to adequately maintain the patents. And so I realized very quickly that early on that the patents were going to be a problem. That
Oh,
not
wow.
not
So
having
even the
control.
small moat they had based their entire company on may not even exist at this point.
Well, in fact, it soon didn't. I mean, it did when I came in and took over. It did, but I was not able to successfully work with the patent office to get all the patents reinstated. And so essentially, it became part of the public domain. And many of our competitors, which were typically not software driven, they were more manufacturers of cameras and manufacturers of network video recorders and those kinds of things. Suddenly, it was in the public domain, and they were able to take essentially our secret sauce and incorporate it into their own products. So, competitively, suddenly I was facing much better financed and much better equipped from a people standpoint companies that now had the only moat that I really had at the time to work with. And so I started to think about how do I fix this? How do I move this business in a way that makes sense? I had already done a pretty extensive analysis of my future competitors because I had gone out and met them all. I purposely go out and one of the plays in my playbook is to go and talk to all of the major competitors that faced all 3 of these companies.
Russ, why do these, I remember talking about this. Why are these competitors willing to talk to you?
Right, and everybody has to. You have to give people reasons to do what you want them to do. Right, I believe everybody's in sales. Just some people don't know it. Right, I mean, whether it's your kids wanting to stay up later, or you're young and single, or you're out or you're out in the bars, you're trying to convince somebody to do something. Right, and so and so in this particular case, even though we were direct competitors, if you looked at the entire ecosystem of the business world, we were actually, in some ways, joined at the hip as well, right? We were marketing to the same companies. We were delivering, at least at a high level, kind of the same value proposition. We were delivering and supporting the same use cases. And so my rap to these guys when I spoke to them was, hey, it makes sense for us to get together, for us to learn about each other and talk about each other, because there are definitely ways that we will want to cooperate against the world at large, even though we're competitors in this in this relatively small area compared to the entire world of business. We're together on this, and it makes sense, and it's worthwhile investing some time to get to know me, and I certainly would like to get to know you, and maybe we can help each other more than we would think on the surface, and that was an adequate reason, adequate for everybody to talk to me.
So that's one. So you're meeting with your competitors, and what are you trying to figure out? You're trying to figure out what they're doing. You're trying to figure out what their strategy is. Obviously, they're not going to tell you everything. What are you trying to achieve out of that meeting that's going to make you decide what to do next?
Well, absolutely. I'm trying to understand what their strategy is. I mean, I did my homework beforehand. I tried to understand how they position themselves. And quite frankly, I was looking for what they were overlooking. I was trying to determine what they were not seeing and what they were overlooking in the market or in the opportunity. And nobody can do everything, right? And so there's always a little room in there. And so talking with them directly, understanding a little bit more about their marketing strategy, talking about their products. People love to talk about themselves, and they love to talk about their businesses. And generally, I found them to be very, very informative, and to give me some guidelines or guideposts rather, to kind of go where they ain't, right? I want to go where they're not, unless I think I can compete with them directly. So I would just really try to understand their positioning, and then look for ways to effectively compete with them. And if some cases that might be directly head to head, but oftentimes it was this idea of going to places or markets that they were not going after.
Russ, you've probably heard of Alibaba. Alibaba started a company that decided, after looking at eBay's business, not to compete with eBay directly in China, because eBay was moving in the China market.
Sure.
They decided to go after, if I remember this correctly, they decided to go after people that were not involved in eBay. And why were they not involved in eBay? Because they didn't trust the seller. They didn't have a chance to negotiate with the seller, so on and so forth. So this Chinese company that was owned by Alibaba decided, we don't want eBay, compete for eBay. It's too expensive for their customers. Let's go find the non-customers, the people that aren't ready. And they made an absolute killing. And within, I think, 2 years, eBay bowed out of the Chinese market, said no thanks.
Yeah, that is absolutely right. I mean, I think that's a perfect example of the kind of thing I'm talking about. I mean, every company has competitive weaknesses. And if you can exploit those weaknesses, and you can live to fight another day, you can end up on top in a similar business to what other people are doing.
What's the other things you look at? So you talk to their competitors. What else?
I talk to everybody. I mean, I talk to our major customers. I wanted to understand why the existing, and in all three of these cases, that we had relatively small customer bases, but there had been a reason why these customers bought from us, and I wanted to understand that, and I wanted to distill that down into a strategy that capitalized on those reasons, on those use cases, and on that value proposition. So pretty much every major customer in these groups I spent time with. I spent time with the people, of course. In all three of these cases, the companies were founded by very, very smart people. In all three cases, engineers. And they had lots of experiences of their own, and they were able to articulate to me why they started these businesses and what they thought they were going to be able to accomplish, and what they had learned in the intervening period. I mean, I'm not a genius, right? I'm just a listener. I want to understand. I want to try to assimilate everything that they had experienced and that they had learned, and then ask them to work together with me to map out a strategy in the context of understanding what our competitors are doing and what the overall market was all about. So, talk to your customers, talk to your competitors, talk to your people. And I talked to a few trusted friends of mine that throughout my life, I've tried to cultivate friends and relationships, especially on the business side, that like to talk about stuff and like to understand and like to help solve problems. And so, a combination of all the data that I gathered from all these places, a candid assessment of our own technology in comparison to the other players in the market. In all three of these cases, by the way, it wasn't clear that I was going to stay on as CEO and that I was going to recommend to the owners. In all three cases, these were venture-backed companies. that they continue with the investment. Now, I am a little bit of a glass half full kind of guy, so I always want to kind of find the good reason and to be able to articulate a pathway to success. And so actually, what happened in all three of these cases, I've done
wow.
that. And
Russ, did you end up with those customers? Did you end up just finding out what worked and just scaled it and only went to those kind of customers? Or did you have to get into certain areas where you went to the company or the board or the VC firm and says, like, these customers, this is not scalable. We need to just pivot away from doing this type of business, period.
Yeah, I've done both of those things.
Okay.
And it wasn't that necessarily that we moved away from the customers, but that I observed a larger unserved market right adjacent to where it was. This is the Agilent story. We primarily do asset protection and loss prevention software. So we're looking for anomalies. It's really looking for exceptions in the data. And there's a lot of companies in the world that have more than one location, right? The way I say this is, if you're a business owner and you have to be in two places at one time, then you need to use some data analytics, because it's the only way that you're going to understand what's happening in the place that you're not. If you go to the same place every day and you have one location, hey, you could probably pretty much figure out, and you certainly know what's going on in that location. But in this case, in Agilent's case, we were concentrating only on the very, very largest accounts. And this was really only 15-20% of the market. Oh, wow. The big part of the market, and that's about in the United States, there's about 3,000 companies that have at least 10 locations that we target and have targeted. But there's 100,000 between 2 and 10. And then there's over 1 million that are 1 to 2 locations. And so when you look at it that way, you suddenly see that there's this large unserved market that has the same exact problems that the large guys do, and they're completely underserved. And if you accommodate them and you can make it easy for them to buy your product, then you can grow the business. And so that was the case where I went to the board and said, here's why I want to shift this. It's going to cost a little bit more money. I want to raise a little bit more capital, but this is how we'll deploy it and what we'll do with it. In the other two companies, it was I shifted in the data communications networking company. I completely shifted the business, and this was part of my 3-month process with the venture capitalists. I basically told them, I'm going to come in, I'm going to do an analysis for 3 months, I'm going to come back with a recommendation. And in that case, we didn't change our product. But again, we changed who we were trying to sell to. Sure. Instead of selling to banks that were trying to connect their branch offices to headquarters with a communications network, again, my timing was pretty good here. The wireless business was just really getting up to speed there in the mid 90s, and we had the ability to take this product and to do some minor changes to it, primarily hardening the components that were in the product. Instead of having components that require ambient temperatures of 70 degrees Fahrenheit and regular low humidity or whatever it might be, I started putting components in there that could stand very wide ranges of temperature, that could be put up on a pole outside, and that enabled us to take this very, very compact and effective device and put it out into a wireless network where it was sitting on top of the telephone pole. And now, instead of connecting branch offices to the bank headquarters, I'm connecting switching centers to the cell towers. And the cell towers become the branches in this scenario, and the switching centers become the bank headquarters. And by the way, there's a heck of a lot of cell towers out there, and there's a heck of a lot of switching centers out there. And we were very quickly able to penetrate AT&T Wireless, and then Verizon Wireless, and Telcel down in Mexico, and revenues just took off. And so everything that I've done has been some kind of a shift and has required a little bit of hand-holding with the board. One of the reasons I'm happy today is because we're no longer venture capital backed, and so I don't have to manage the board all that well. I have a private equity firm. I like to think I graduated from venture capital to private equity. With venture capital, if you have multiple investors, you end up spending a significant amount of time, 20-25%, really just getting them all online, making sure they all understand. Every one of them has different expectations. They have different time cycles. They've come in, on X date, and they have a 3 or 5 year plan, but they're come in at different times, and so it became a big problem with private equity. Usually, at least in my case, my experience has been that they're buying the vision. They're buying the direction that the leader is taking, if they're going to keep me, which luckily they have, and then they stay the heck out of my way, and I don't have to manage them. So my ownership management time goes from 25% down to essentially 3% or something like that. And so,
Russ, one of my favorite startups that I advise and invest in created this amazing product, and it was a product that would slow down what let's say the professor or a YouTube video was talking about in real time. It would speed up and speed down based on the complexity of what they're talking about. Anyway, long story short, they weren't getting any traction, even though the technology was brilliant. They ended up accidentally running into someone, and then they found a brilliant pivot, and the pivot was call centers. Call centers cared more about you slowing down speech and would be more than willing to pay for it because it was an absolute need, right? I need my call center people to understand Russ in the United States, who talks really fast and long. And I need to, in the real time, slow Russ down. And at the same time, when he's just talking about, hey, how his vacation was and blah, 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 to speed it up, to catch up. So the call is still 1 minute.
Stuff. Wow.
Oh, it's really cool. And they found
these are non-native speakers, right?
Non-native speakers. Originally, it was just,
Great.
hey, I'm a master's student, and as brilliant as I am, or a PhD, English is my second language. I don't understand what this professor's saying. He's talking too fast. But they've realized that to educate that many consumers, to turn them into paying customers, was very, very difficult. So they found a great pivot. So I'm a big fan of pivots.
Yeah, for sure.
Russ, what signals, not so much, I don't want examples, because we've already heard the wonderful examples. Like, what signals tell you a pivot is necessary? And maybe we're looking at it as let's say we're looking into our own portfolio of companies, or we're looking at your own company or something. How should we, what signals should we all be looking out for that you see a necessary tweak, a complete pivot versus a small incremental tweak in execution? Because sometimes it's just execution. Sometimes it doesn't matter how much you incrementally change the execution. Unfortunately, the product does not have the need.
Right. Well, I mean, a couple of classic ones are growth rate and churn rate, right? If you're not enjoying growth, and you're not enjoying the kind of growth that it needs to be there to support the business, you need to look at other alternatives. So that certainly is a signal. Now, churn is the other side of that, of course. And if you're churning through a lot of customers, then your value proposition's not working, your use cases aren't working, and that also has got to drive you to rethink what you're doing. I think assessment of the team, the competitive product, we already kind of talked about a little bit. So I think performance metrics around sales, around churn, around people satisfaction, and the kind of creativity that they're demonstrating, these are all, I think, important signals.
How about, do you ever look for external factors like, hey, sorry, man, this product was great pre-AI, but AI is going to put you out of business because, you're looking for those signals as well, external.
Absolutely. And in fact, in one of the businesses in the Paragon Networks case, we had technology breathing down our throat, right? We went from, and I had a telecommunications background, so I lived in the world of copper. I lived in the world of standing up a conversation connection from end to end. It was the way that the world worked back in the 80s and early 90s. And then we had the advent of ATM technology. I don't mean the asynchronous transfer mode is what I'm talking about, not the money machine. And then obviously the TCP/IP world was a giant wave that completely changed this whole networking business pretty much overnight. Wow. And so if you sit idly by there, you're gonna watch your business just go away. So
Russ,
do
you remember a time where you got it wrong?
Do I remember a time where I got it wrong? I never would admit getting.
Maybe offline.
I never would admit, but I did. Not so much at that kind of macro level. Well, no. Let me rethink about that. So I mentioned about InfiniBand. So InfiniBand technology was a technology that was developed by committee. Basically, it was all the big tech companies got together, and the problem that they were trying to solve was the unreliability of Ethernet, and in a high bandwidth world, Ethernet, it's the best efforts kind of technology, and so you can make up for that by increasing the amount of bandwidth, which is what they eventually did. They went from 1 gigabit Ethernet to 100 to quite fast speeds, and therefore a couple of drop packets wouldn't matter. But InfiniBand had started out as the Ethernet killer, and it was specifically to get at this latency issue and at this reliability issue. In the sense that I backed the wrong horse, I mean, that technology was going to go away, and I really didn't see it at first until these higher speed Ethernet products started to come online very quickly, and that frankly is what pushed us to sell the company after I had already done the pivot to the oil and gas industry and other areas.
Nice. So, Russ, how do you evaluate leadership, product, and capabilities quickly? Let's go back to your playbook, right? You've got a turnaround playbook in your head, or you've actually physically got it. Who knows? Maybe you have a book on it. But how do you evaluate it quickly? Because that's, I'm sure, one of your responsibilities is, look, we don't have 2 years, Russ, for you to do it. We need you to tell us within 90 days if this is a dog, or is this something we need to double down on.
Now you're talking about so the leadership within the company, the people
leadership within the company, the actual product, and then of course the sales capabilities of it, the value, just the value kind of proposition of the company.
I consider myself a salesperson, and I built my world up around sales originally, and so I have a very, very well developed bullshit detector. I can tell when someone is not being square with me or telling me some kind of story or fairy tale. And that is not just in the sales environment, that carries over quite well into other places. I'm pretty well read, and I've been fortunate to get a great education. So the quick assessment is by talking to people, talking to the leaders, understanding what their vision is, what they believe their role is, and how they fit inside the company, and what their responsibility is to their teams. And making, frankly, quite quick assessments about whether they're the kind of person that can work with me and can get the job done and anticipate the challenges. And I've made some mistakes, by the way. I mean, on the sales side, for example, I don't know how. My personal opinion is that no matter how good your process is in evaluating salespeople, and there's all kinds of tools out there to evaluate salespeople, and you do tests and these kinds of things. I would say my track record is 50-50.
That sounds pretty good.
Yeah, I mean, but 50-50 is the same as chance, right? I mean, I might as well do none of the
interviews and all that.
I just hire people. Half of them are going to work, half of them aren't going to work. You want to be better than that, and you kind of delude yourself into believing that's going to be the case. So the point is that you're going to make some mistakes, and you don't have 2 years, as you pointed out. So you take everything you take your intellect, you let people explain themselves, you let people describe what they believe, what is their philosophy, how do they feel about managing people, how do they manage people, what do they think the most important part of management is, and you make quick decisions. And
that's the key.
You got to make quick decisions. Even in sales today, I tell my guys, lose quickly. If we're not going to be a good match, lose quickly.
Yeah,
because
don't spend a year being in the kind of the friend zone, right? I mean,
absolutely,
it's not worth it. Oh, he's so nice. Oh, he met me up. It's just like, look, are you getting anywhere? You're in the friend zone, brother. I got to tell you.
Yeah, exactly. Well, I love salespeople who tell me, well, they're talking to me. It's great that they're talking to me. I want to talk to people who are talking to me. Yeah, but are they going anywhere? Are they?
No.
It's
people
kind of
people
crazy.
think kind of like things have to be moving up, not sideways, for you to have a chance. Russ, there's something I read that actually it looks something like this. Out of three, 33% of your hires will be good if you're doing it well. 33% will be just average, okay, decent, right? And then 33 will be huge flops. Is how quickly can you figure out the flops, get rid of them? Because now you really just got a star performer and someone solid, average, decent, then maybe isn't drawing away from it, right? And they will.
Yeah, I mean, everybody wants to hire A players, right? But there's not enough A players out there.
Exactly.
So you got to take some B players and C players.
And
but
hey,
you don't have
sometimes
to
you need some role players from time to time, but the C players are very, very tough. How do you? Okay, that's great. How about your process of finding new markets or product fits that others miss? Like, what is it that you're able to do? Again, it's going to go back to your research, you asking questions, which you said, hey, it's not brilliant, but that's the brilliance. But like, how do you find product opportunities others overlooked?
Well, the one, if I can, I want to give one more expansion on the previous question where you asked me about how do you make decisions quickly. So there's two levels of that, right? The first level is you got your lieutenants. I need a team that, the C-level team or the senior management team. You got to go through that level first, and you've got to make an assessment about whether those individuals, first of all, can work with me, that hopefully has some shared philosophies and shared approach, or at least are willing to adopt mine. Yes. and to support mine, and then you've got to give them the room to do what they need to do, and coach them to do the same thing going down the next level, right? So they need to be surrounded by people that are going to help support them and help drive it. So it's kind of a cascading, concatenated process that should eventually get down through the whole organization. And one of the great things about small companies that I like about them is that you can build, as you scale the company, you can kind of build this into the DNA of the way human resources and human resource management works, right? The employee problems and employee challenges start with employee number 2. So you need to be in a position to be able to build that up. So anyway, I just wanted to add that.
Oh, that's great.
As far as finding markets, my experience has been very specific, right? I come in, and the first thing I want to know my product, right? And if I don't know my product, then I'm never going to know my customer. So the first issue, at least for me, with these companies that I did not found, is what is the product capable of doing? Are there things that we can modify in the product that will allow us to open new markets, will allow us to sell better to the markets that we're already selling to the existing customers? Does this product have legs, and is it morphable? Can it move in other directions? Can it do other things? So that in my mind is the first step. Now, if you find that you've got a product that's got capabilities and functions that are worthwhile, then what you're trying to do is figure out other places where that product can fit, right? And so it's thinking open-ended, and it's basically green lighting sessions, getting your team together and talking about what the value proposition, what are the use cases that are known for the products that you have, and other markets, other customers that would be willing to pay, maybe even be willing to pay more for that same thing. And it's kind of a plodding, rigorous process to kind of go through and think through it, and go industry by industry, customer set by customer set, and hopefully, I think it's often the case that you can find some ideas there. You end up having 3, 4, 5, 6 ideas about how to move it, and then it's about execution and about testing and about being sure, before you invest huge amounts of dollars in things and trying to scale it. You need to kind of, okay, I had these 6 ideas. Let me prioritize them. Maybe I can do 2 at once instead of 1. But at least prioritize them in some kind of sequential fashion and test the market out. Determine whether your theory is correct. So it's all about theories. It's all about understanding the product, therefore understanding your customer. And once you understand the customer, create opportunities where you're in a position to ask them to buy so that they can solve a problem or take advantage of an opportunity. And that's I mean, as far as what I've done, that's what I've done.
Russ, one of the biggest things is willingness to pay, right? How do you determine quickly? Because again, time is of the essence, right? Sometimes these companies we're talking about have 3 months of runway left. So you don't have 2 years to refind product market fit. How do you figure out the willingness to pay and the right potential customers? I mean, are you talking to these potential customers? Are you paying them to meet them? Because a lot of times people see these conversations as a ploy to get my business. Like I get those emails all the time. Hey, would love to just pick your brain on this great product. It's just willing to pay. But I know it's just a ploy to then try to sell the product, and I don't have the time for it. How do you get that? How do you get those meetings very quickly and get honest feedback too, to what people are willing to pay, and will they actually buy it if you build it?
So the first thing is you've got some data points, right? When you come into these companies, you know what the existing companies paid for the product, and
yes,
and so and that is not necessary. That is probably not a guideline. I like to, if I've gone through the other process that I described, where I've identified additional markets, then I want to come into those markets and the pitch, the deliverable to them, what makes it worthwhile, what's in it for them, a whiff 'em, right? What's in it for me, a whiff 'em. If they got to whiff 'em, then they're going to listen to you, and they're at least going to give you time. So you need to express to them why it's worth their time to talk to you. The next thing is price discovery. I see it all the time. People price products too low. At least, I mean, there's a few other methods of doing things. There's a freemium model. There's a bunch of other approaches that have proven to work that allow you to price discover over time. You get people used to using the product. You wall off certain capabilities, and then you make them pay significant amounts of money to get there. But the other thing that I see all the time is that, and this is salespeople, right? Salespeople want to handle objections. They want the objections to go away. And in way too many salespeople, way too many salespeople, they think the objection is always price.
It's always price.
Always price.
First thing they negotiate against themselves.
Absolutely, they go in there too low. I heard a great story one time. A guy I was interviewing to be our chief revenue officer. We didn't hire him, but he told me a story about how he was in a competitive situation. And they told him they really liked his product. They wanted to get a quote. He came in with a quote, and the quote was something like $40,000 a year. A couple of weeks later, or a couple of days later, they called him back and they said, we're not going with you. And he said, well, why? He said, well, we think we have a better solution. And the guy said, what was it, price? And he said, yes. You came in at 40,000 a year. Mm-hmm. We are buying the software product from somebody that's going to charge us $200,000 a year.
How good can your product be, right?
How good can your product be
yes.
if you're only charging 40,000? And they were, their strategy was this kind of loss leader strategy where they would go in low and then raise prices over time. So I think you have to be willing to experiment. Another thing I like to say always is I can always come down, or I can always add more capabilities. There's no point in starting low. Start high. You'll find it by starting high and working down based on the reactions you get from customers. It's good to have it structured from a marketing standpoint in ways that maybe you can take out certain capabilities out of the product to adjust to price if you get that kind of sticker shock.
Russ,
reaction.
what do you say to kind of that? What do you say to the folks that are saying the problem is sometimes you start so high that the price is so high for that other person that they don't even want to negotiate because you are so above their range.
Right. I've had that happen to me as well. not in the not too distant past. I had a new sales vice president that came in, and he's very disciplined, very fastidious, very process oriented. And I explained to him, he coming in, that I didn't believe that we were getting the value for the product, and that even, if we look at a cost base up here, from a cost basis standpoint, we can survive at this kind of level, but I thought in terms of the value that we delivered that we were not really sharing in the value creation that we're delivering to the customers. So he took that to heart, and he started coming in very, very high on deals. and we lost the deal for exactly the reason you're talking about. So I don't know if I have a quick rule of thumb there. I think experience has to play in it, and it gets back to from my perspective, the testing of this. Right. I mean, you could test close. I mean, one of the old statements is always be closing. Right.
Yeah.
And what that, so ABC, always be closing. The point there is that you're gonna trial close again and again and again through the process. And if you're listening enough, if you're listening intently, and you're watching reactions, and if you're able to break down that trial close process into kind of functions and benefits, you can start to get an assessment of how that customer values the benefits that they're going to get. And then when you're delivering the price, and you shouldn't be delivering the price in the first meeting or the second meeting or the third meeting, at least in a complex software sale from my perspective. The other thing I hate is people jumping right into demos. No. Don't do demos. You don't do a demo until you understand pretty much everything there is to understand about the company. And then when you do it, you're not doing administrative training. You need to focus in on those 2 or 3 things that the customer has identified as their problems, and show how your product is going to solve that problem. Sure. And if you can size that in terms of what that problem costs them, then you're getting some information that's going to help you do good pricing on it.
Nice.
So it's an interactive process.
Very good.
Yeah, I don't think there's any simple way of doing it.
Let's talk about exit strategy, right? Because it's all about building with the end in mind sometimes.
It is. Absolutely.
What are the key moves that make a company attractive for acquisitions?
And by the way, that's my job, right? When I'm hired by these guys, I mean, the first assessment I make is it a viable business? Can I scale it? Can I grow it? Can I achieve the? And then can I exit it, right? So, and who would the buyers be? So that last question is one that you have to be thinking about pretty much constantly. Who is it that would benefit from this product or service? Is it, in today's environment, it's gotten very, very different than it used to be. It used to be that you either go public, or you would sell to a strategic. Mm-hmm. Today, with the way the private equity ecosystem has evolved now, you have this entire hierarchy of private equity firms, some that specialize in the getting them up to 20 million in recurring revenue. I'm talking software here, but getting them up to 20 million in recurring revenue. There are those that take the 20 to 40 or 20 to 50, and then those that take the 50 to 350. And so there's this just huge ecosystem of interrelated firms, and they're all incestuous, right? Oh, yeah. They all work together at the other one, and then this one went here and started his own thing, or another one went to another larger company. So in today's world, for a software business, a large percentage of the exit opportunities are with private equity firms, and so therefore it makes sense to cultivate relationships with private equity. And so I've spent over the years a lot of time meeting and learning and trying to understand strategies of private equity firms, which are not always clear. Sometimes you can go to the website, you can talk to people, but sometimes it's not really clear what their actual operating strategy is. And so learning about that is important. So from a private equity ecosystem, I mean, I don't think there's any. I think that I heard a statistic that the number of public companies in the U.S. has been reduced by about 50%. Oh, yeah. In the last 30 years or something along those lines. I
personally know about 10 publicly traded clients of ours, or former clients, that were brought private by a private equity firm. So it's very common. They're the ones doing all the deals.
Russ, they're the ones doing all the deals, and they're taking spin-outs of divisions and then building them and combining them and doing that.
There's in a previous episode, there was a great book, Private Equity Playbook. Adam Kofi was on my podcast.
Oh, I'm going to have to go look at that.
Go watch it. Really good book, really good podcast. So anyway.
Great. If you sell it to a strategic, then it's other things, right? Then it's understanding how your product will fill a hole in their product line or in their market. Generally speaking, strategics aren't going to be completely unrelated businesses. They're going to be businesses that are operating within the same sphere of influence. Sure. And so there it's a matter of understanding how you fit in, how you would benefit them, and then just like selling to customers, you need to be able to put together an effective argument for how you will benefit them. And that often is, again, listening and learning from them about what it is that they want to do and what they consider to be their aspirational objectives and their goals, right? And goals is another thing about me. I'm a big goal guy across the board. I talk to my kids. I mean, I have little goals, I have medium goals, I have big goals, I have long goals. And I think looking at the world in that way and trying to understand what the goals are of the private equity firms and of the strategic potential buyers is an extremely important thing to do when you're out there pitching them on buying the company. And
how early should people be thinking about these exits? There's two trains of thoughts, right? Day one, build it to sell, so on and so forth. Others say, forget all that. Just build a great business that people love. And, that way you're not reliant on some exit. If you don't exit, hey, you've got a great profitable business that's taking good care of you and you can keep scaling it.
Yeah, I think if you're the owner and you got a lot of stock, I think I like, and when I was younger, personally myself, I like the latter argument, right? Sure. Build it and they will come, right? It's the field of dreams kind of approach on things. As time has gone along, and as I've gotten older and more mature, I've started to think. Matter of fact, I used to look down my nose at people that built businesses just to sell them. I used to say, that's not what building a business is about. You're building a business is to be sustainable and to, give back to the community and create employment for lots of people and have a role in society. But as I've gotten older and more experienced, I've become more oriented around the former, right? So sure. I think both of those philosophies can work. I tend to, emotionally in my heart, I'm more attracted to the second one, build it and they will come kind of approach, but I've become more pragmatic over time.
Nice. Well, Russ, also, I think one thing that's changed, forget tech, but in traditional businesses, the whole concept of Russ's son will take over the business or daughter will take over the business, that's dying, right? That's why so many traditional businesses are selling now because their kids don't want to they either don't want to work or they don't want to take over their businesses. They have successful careers, so on and so forth, and so it's not a given anymore.
Well, what's the rubric? The rubric is that the founder founds, the second son expands and grows, and the third son, is down in his basement playing video games, and smoking,
enjoying all
right.
the money.
Exactly, they destroy it all, right? They destroy it all. But I don't. It never occurred to me. Of course, I was never in that situation. So I suppose if my father owned a business, I think I would want to do it. But I think it really depends a lot on the situation. But I do think that more often than not, doing that strictly because somebody is your flesh and blood doesn't make a lot of sense.
No, that's you're right. Any mistakes you see founders often make, kind of when the end game is in sight?
When the end game is in sight.
Yeah.
Well, I think sometimes they have unreasonable expectations. They have unreasonable expectations of what their
baby's worth.
What their baby's worth, right? and their baby's beautiful, and they can't stand criticism or and so I think reasonable expation setting is sometimes very, very difficult to do with founders because they're so emotionally attached to the business. And I think one of the things that I think I bring to the table is a little bit of a detachment there, because typically I'm working for the options, right? That's the way it works for me, and so
that's huge.
Yeah,
Russ, what's something fun that you do that's not common that we should all think about doing?
I don't know how common it is, and I'm not sure many people would think it was much fun, but I like reading biographies. I learn a lot from biographies, and I'm up to now George W. Bush. I've been reading the presidential biographies, starting with George Washington.
Wow.
In order.
In order.
And in order. I've read them in order, and a lot of them. Now, one of my best friends, who is a partner at Accenture, goes whenever I start talking about this, he goes, boring. not very interesting. But I can't tell you how many insights I've gotten from the way both the presidents get elected and how they deal with the environmental dynamics. And I don't mean the energy dynamics. I mean the political environmental dynamics that they've got to deal with, how they dealt with crises and the decision making process, how they position themselves. And there's a natural overlap, right? Because generally speaking, if you become president, look at our earliest forefathers, right? You had Washington, Jefferson, and Adams, right? They all worked together, and then they successively became president. So there's all this overlap and contrasting styles, and again, a lot of people that I talk to say that's very boring. And matter of fact, I don't talk very much about it, to be honest with you. So,
Russ, it's funny you answered my next question, which was, what's your favorite book? But it sounds like you kind of answered that. It's all.
Well, I also read a fair amount of fiction.
Give me one.
And I'm a big fan of Sam Clemens and Mark Twain, and a Connecticut Yankee in King Arthur's Court was one that I always nice. Enjoyed. Always cool. Enjoyed that. Yeah.
Very cool. Wow. Russ, thank you for sharing your blueprint into turning chaos into clarity. You were a firefighter after all. You don't know that, but
that's right. Good point.
You kind of did it from bold pivots to strategic exits. Your journey offers invaluable lessons for all of us, especially those that are navigating growth and potential pivots and uncertainty, especially with AI. Guys, if you want to connect with Russ, you can find him on LinkedIn, right? Yep. Explore his work at Agilence, great company doing good things. Really appreciate you being here, Russ. Any ending thoughts for us all?
Well, first, Avetis, just let me say thank you so much for the opportunity to come on board, and thank you for the kind words. You're being very, very, very kind with me. I'll just repeat what I said before. Know your product, know your customer, create opportunities for all of them to buy, and you'll live a happy life. Beautiful. Oh, and make sure you put your wife number one, or your significant other. Make them number one in your life.
Great advice, Russ. Thank you so much for being here. Appreciate
you. Thank you, Avetis. Okay, bye-bye now.
And that brings us to the end of another great episode of the Tech Leaders Playbook. I want to thank you for joining us and hope you took away some valuable insights to apply in your professional journey. Don't forget to subscribe on your preferred podcast platform so you don't miss out on the next great conversation. I promise it'll be good. If you enjoyed today's episode, we'd appreciate if you could leave us a review. Your feedback not only helps us improve, but it also helps others discover the podcast. Better leaders mean better working environments. Better working environments leads to happier people. Remember, a rising tide lifts all boats. I'm Avetis Antaplyan, and this has been the Tech Leaders Playbook. Keep leading, keep learning, keep giving, and I'll see you on the next one. Until then, stay inspired, my friends.